Every year, as the return filing date approaches, most of us stress out thinking about how to save taxes. Any jugaad, tips, tricks, finding out these things. Some approach their ज्ञानी friends,
मैं तो तेरे को हरामी समझता था, तू तो राम निकला रे, देव मानुस निकला।
while others reach out to their colleagues, and there are some who help seek from tax advisors. Whichever way you choose, the point is you need to be aware of various tax saving options available to you. One of the most widely used option to save income tax is Section 80C of Income Tax Act. Let us understand how you can benefit from Section 80C deductions. Now, firstly, to understand what is Section 80C deduction. As per Section 80C, an individual or an Hindu undivided family (HUF) can claim a deduction of up to 1.5 lakh from gross total income if investments are made or expenses are incurred in specified avenues. Now, if you don't know what gross total income is, let me explain you what it refers to. That is your total income earned by an individual on a paycheck before taxes and other deductions like your employment provident fund, professional taxes and income taxes. Now, while the maximum limit for tax saving section under 80C is rupees 1.5 lakh, there is no minimum limit. When you claim a deduction, you reduce your gross taxable income and thereby the total tax payable by you in the financial year.
अरे टेंशन नहीं लेने का, अपन है ना।
Now, let us understand this with an example. Okay, so let's say in financial year 20 to 21, your gross total earnings are 10 lakhs, which is without any taxes and deductions, and you have invested rupees 1.5 lakhs in various schemes which are eligible for deductions under Section 80C. Now, you can claim the tax benefit and reduce your income tax liability to rupees 8.5 lakh, that is 10 lakhs minus 1.5 lakh rupees, and pay tax on 8.5 lakh rupees only. Now let's talk about the eligibility to claim Section 80C deduction. As I mentioned earlier, an individual or Hindu undivided family can claim a deduction under this section. These deductions are not available to partnership companies and other corporate bodies. Besides, you can claim a deduction only from the income of the financial year in which you have made the specified investments or incurred the particular expenditures. Now, some of the most popular investments and payments eligible for tax deductions under Section 80C are as here. First is investment schemes like your ULIPs, ELSS mutual funds. Second is retirement savings schemes like your Public Provident Fund, PPF, Employment Provident Fund, and VPF, which is Voluntary Provident Fund, National Pension Scheme, which is NPS, and superannuation on funds. Third one is fixed income schemes. In this, we have Sukanya Samriddhi Yojana, National Savings Certificate, which is NSC, Kisan Vikas Patra, which is KVP, and Senior Citizens Saving Schemes, which is SCSS. We have 5-year post office term deposits and 5-year fixed deposits in bank. Number 4 is insurance schemes, like your term insurance, annuity plan, and endowment insurance. Okay, the fifth one is the miscellaneous ones like your home loan repayment and tuition fee repayment. Now here we will talk about the taxation rules, the lock-in period and return of various sections under Section 80C investments. Starting off with the first one, which is our Public Provident Fund. Under this, the taxation rule is completely exempted and your lock-in period is for 15 years, which will approximately generate you 7 to 8% of return. The second one is the Employment Provident Fund, of which the taxation rule is completely exempt unless you withdraw before completion of 5 years of service. And this lock-in period is for 5 years, which will generate you 8.65% of returns. Moving to third one, which is ELSS, which is Equity Linked Savings Schemes. In this, the taxation rule is principal investment is tax deductible. Returns are taxable if annual capital gains exceed rupees 1 lakh and the lock-in period is for 3 years, which will generate you 15 to 18% depending on the market. Fourth one is National Pension Scheme. In this, the taxation rule is amount deposited annually is tax deductible. Pension payout is taxable as per your tax slab rate, whether you choose old or new one. And the lock-in period is till retirement. So you generate a return of 12 to 14%. The next one is tax saving fixed deposits, which are investments are tax deductible. Interest earned is taxable at payout depending on your interest tax slab rate. And the lock-in period is for 5 years, in which you will generate 6 to 7% of return. The next one is National Savings Certificate. In this, The taxation rule is principal investments and reinvested interest are tax deductible, and your final interest, which is your final year's interest, will be taxable. And the lock-in period for this is for 5 years, which will eventually generate you 7 to 8% of return. And the next one is Sukanya Samriddhi Yojana. In this, investments are tax deductible. The lock-in period is for 21 years and you will generate a return of 8.5%. The next is Senior Citizen Savings Schemes. In this, investments are tax deductible. Returns are taxable as per tax slab rate of senior citizens, and the lock-in period for this is 5 years. You will generate a rate of 8.7% return. Now, there are tax exemptions other than Section 80C2 available from various other subsections of Section 80D. These include, first is Section 80D. Under this section, you can claim an exemption on premium payments towards health insurance of self, parents, spouse and children. A deduction is available up to 25,000 for self and spouse and an additional of 25,000 for parents. Second one is Section 80G. Under this section, you can claim an exemption of up to 50% or 100% for the donations made towards various charities and social causes, depending of what cause of donation was that. Third one is Section 80GGC. Under this section, you can claim an exemption for donations made towards any political party, provided payments are made through online modes other than cash. Now, tax deductions are an excellent way through which you can do your tax planning and reduce your overall taxable income. However, the amount of deduction varies depending on type of investment you claim. That's it. Hope this was informational and useful. Now, to check out how you can transfer your money from credit card to bank account for free, click here. Like always, have a wonderful Sunday and rest of the week. Until then, my name is Vishal. Thank you so much for watching. Catch you next Sunday, 4 p.m.